Hello, traders. Welcome to today's market analysis. It's been an eventful week, so grab a coffee and let's get into it. Let's start with the US dollar index. It took a bit of a hit last week, mostly due to weaker than expected data on personal consumption expenditures. This came right before the weekend, and combined with some political struggles in the US, market sentiment took a downturn. The dollar index had been on a strong rally, reaching a 2 year high of 108.55, but then retreated below 108. After rising over 0.8% the previous weekend and nearly 1% the week before, it's now hovering just below 108. So, why did this happen? Well, US Treasury yields climbed above 2.5% last Wednesday, which is significant. The Federal Reserve, led by Chairman Jerome Powell, made it clear they're cautious about rate cuts moving forward, especially since inflation remains above the target. The Fed's outlook: not many rate cuts on the horizon. In fact, their projections show only two rate cuts in 2025, down from the four predicted earlier this year. On the technical side, the US dollar index is still holding strong above the 20-day moving average, sitting around 106.72. But without any fresh catalyst, the dollar could remain in this range for a while, waiting for clearer signals to push it up higher. Key resistance levels to watch are 108.55, with targets extending to 109 and 109.2. On the flip side, if the dollar drops below 107.56, the next level to watch is 107. Now, let's talk about crude oil. Last week, we saw oil prices drop for four straight days before a small technical rebound. The strengthening of the US dollar made crude oil more expensive for buyers using other currencies, which slowed down demand. This, combined with expectations of an oil supply surplus of 1.2 million barrels per day next year, led to a bit of a price pullback. The outlook for oil isn't all bad though. There's some potential upside in 2025, especially with President elect Trump's promise to boost domestic oil production in the US. However, new drilling projects take time to ramp up, so the impact on supply may be gradual. Currently, oil is fluctuating around the $70 mark, which is a psychological level for traders. Resistance levels to watch are 70.82 and 71.46. If prices break through, the next stop could be 72.23. On the downside, we have key support at 67.12 with 66.53 and 64.75 as potential lower levels. Moving on to gold. It's been a tough week for the yellow metal. Gold prices fell about 0.95%, largely because of a stronger dollar and rising US Treasury yields. The Fed's hawkish stance on interest rates also put pressure on gold. When interest rates go up, holding gold becomes more expensive since it doesn't generate interest like bonds do. However, there's still a glimmer of hope for gold. If inflation concerns continue in 2025, gold could see some upside. For now, technical indicators suggest that gold is facing some resistance around the 2,626 mark. If it can break through, we might see it rise towards 2,663 or even 2,700. On the flip side, if gold falls below 2,583, it could drop further to 2,556. Next up, we've got AUD USD. The Australian dollar has been under pressure, closing lower for the third straight week and hitting a 2 year low just under 0.62. The US dollar strength is a major factor here, as well as some ongoing geopolitical risks and concerns over China's economic troubles. Additionally, the Reserve Bank of Australia's dovish stance is weighing on the Aussie. However, there might be a glimmer of hope. The technical indicators like the RSI suggest that the Australian dollar is oversold, so we could see a short-term bounce. The key resistance is at 0.627, and if it can break above that, it could challenge the 0.63 level. On the downside, 0.6199 and 0.617 are key support levels to keep an eye on. Finally, let's talk about USD JPY. The dollar has been rallying against the yen, pushing past the 157 level after the Fed and the Bank of Japan made their decisions. The Bank of Japan capped interest rates at 0.25%, but their cautious approach to tightening is keeping the yen under pressure. Meanwhile, the Fed's hawkish stance is driving long end US Treasury yields higher, which is benefiting the dollar. Technically, USD JPY is showing strong momentum above 155, and if it continues to push higher, the next major resistance level could be 158, then even 160. On the downside, keep an eye on the 156 and 154.45 levels for potential support. So there you have it, a quick rundown of the US dollar, crude oil, gold, and a couple of currency pairs. With the Fed's cautious stance on interest rates, oil supply concerns, and gold's struggle against rising yields, there's a lot to watch as we move into 2025. As always, stay tuned for the latest updates and make sure to keep an eye on those key levels. Thanks for watching, and don't forget to like and subscribe for more market insights. Happy trading, everyone!